What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and welcome back to your favorite daily dose of economic chaos, the Trades and Gains Market Daily Recap. It is March 31st, 2025 at 4:42 p.m. on a beautiful Monday, and stocks are trying to crawl out of the abyss before Trump drops a tariff nuke on Wednesday, April 2nd. The Nasdaq's dragging like it just ran a marathon, and the S&P 500 is clinging to green by its fingernails. I mean, not so much. It ended, I think, around 0.56 or 0.63% today. But the Dow is somehow pretending all of this madness they are immune to, which is weird because they're always like the redheaded stepchild that's forgotten about. And it flipped 1%. Like, what? But obviously, this is a value rotation that is starting to kick in as well. But don't let the green fool you. This was a quarter straight out of a horror movie. Let's break down the bloodbath of today, folks. Now, to kick things off, March was absolutely brutal. The Nasdaq closed down 5% on the month and is down 10% year to date, which is usually correction territory. We also had its worst Q1 since the pandemic, and the S&P 500 is down 5.1% year to date. And the culprit is Trump's tariff tour of 2025, folks. That's who you have to thank for that. Now, President Trump is set to hit publish on his tariff threat list on April 2nd. So that should be interesting to see how the market's going to digest that information. AKA Liberation Day is what the street is calling it currently. So yeah, it's about to be liberated. But moving on, reciprocals for everyone, no exemptions, not even Canada. Investors are sweating harder than a Tesla owner watching their resale value drop faster than their self-respect. Core PCE came in hotter than expected. Inflation is still sticky. And just like your roommate's half-eaten Chipotle bowl from last week. Yeah, it's not smelling too good. Because I left a Chipotle bowl once in my office for a day, like just overnight. I forgot about it. Oh my God, I thought something died. I had to Febreze and deep clean the entire space. It was awful. Anyways, moving on. We have Trump casually threatening a 50% oil tariff on all countries still buying from Russia or Venezuela because, well, what's diplomacy without a little bit of unneeded drama? Now, again, tech still can't catch a break here. We have the Nasdaq slipping again with NVDA down 3%, Tesla down 2.6%. Meta and Amazon sold off under tariff pressure as well. Again, that's no exemptions. So why does all this matter exactly? Inflationary. Tariffs equals inflationary. Inflation equals bad for growth stocks. Combine that with weak economic consumer data and a fragile labor market, and you've got a macro cocktail from hell that is ready to dump this market faster than your ex-girlfriend. Now, let's go ahead and head over to Investor Central Club, our sponsors for this video, because they are our #1 data provider of finding quick and actionable options trades in a no-sense way and format, as you will see once we log into the platform here. Now, first things first, like we always do, we're going to go over Flow Scanner and see what hit the tape today, baby. So, when we are looking at the day, we had, wowzers. SPY had 154 million in total overall flow with 21 million in calls, but 133.6 million in puts. That is eye-opening. And our most frequent contract that was hit on today, and this thing was getting lit up like a Christmas tree towards the end of market close with just block orders coming in. The 550 puts that are expiring in April 4th of 2025. So yes, we are still expecting more downside here, folks. Those 550 puts are printing, son. Big boy big boy bets are going into the tariff week. That's for damn sure. Next up, we had NVDA coming in second place with 49 million in total overall flow, with 33 million of that coming into calls against 16 million in total puts here. Now, most of it's the 104, 105, 106 level, but our most frequently hit contract here were the NVIDIA 105 calls that are due again for next week end of this week. So it looks like somebody's betting on NVIDIA to pop here, which is kind of weird because tech has just been getting its face kicked in. Yeah, so that's not hedging. That's just nuking a bullish thesis at that point. I don't know what to tell you. QQQ, we had 46.7 million in total flow with 26 million in calls against 20 million in puts. Very much a flippy-floppy 50-50 type of day for the Q-sters out there. I don't know what I just did, but I think I broke the platform. Let's pull up that common contract. So QQQ, our most common contract, the 468 calls expiring on the 7th of 2025. 468s, 220. 255, 250, 240, so that's like 750 right there. Yeah, so we can call it like a cool million in premiums that were spent on this throughout the day. Moving on, we had Tesla with 26 million in total flow on today, with 11 million going into calls against 14 million in puts. Again, between Elon's government bromance and tariff exposure, the name is just absolutely radioactive and is kind of like a casino right now. Moving on, Google and Microsoft both saw heavy block trades, more like institutional get the fuck outs than conviction buys, to be honest. And Meta, Palantir, Amazon, and Apple all had unusual flow as well, and blocks across the board. Nobody's safe. The mega cap halo is starting to flicker, so watch out for that because it could get bloodier than a menstruation cycle. Moving on to our dark pools, where we get to see where the big boys let it all hang out with the things out. It was a dark pool deluge today, as we can call it. We had SPY $600 million in prints at the $558 to $560 level. That's heavy distribution under the hood there. NVIDIA saw $273 million at the $108 level. These aren't dip buys. These are exits through the side door or Irish goodbye, whatever you want to call it. They are getting out with hopefully not making any noise, but too bad because we're scanning the dark pool, so we're going to find it. We're going to find you, little dirty boys, all right? We had Microsoft, Google, and Apple all saw massive block prints here as well, averaging 250 million plus in order size, or in premium size in this case. And the algos are front running the risk here, and that's all we're seeing. The translation of all this data, though, the institutions aren't buying the dip. They're ghosting it like your Tinder date. Moving on, back to our news of the day. As I mentioned before, Tesla's down 2% and still falling like a Cybertruck off a cliff. We also had NVIDIA dropping 3% with the CoreWeave IPO hangover plus tariffs equals a total pain for them. Moderna cratered 9% after the FDA nuked its top vax guy. Interesting. Meta, Amazon, and Google are all red. So nobody's safe, folks. Nobody is safe. We also had buyers fleeing to dealerships before auto tariffs hit, with a Lexus dealership in New Jersey was quoted saying, "We're slammed. People are straight up panicking," says the owner. Buyers are rushing to lock in car purchases before a potential 10K price jump from Trump's new 25% tariff on foreign vehicles. Oil and gold also soared on trade warfares. Oil, WTI, closes Q1 in the green, and Trump threatening 50% tariffs on countries buying Russian oil. Gold hits a new record high as traders rush for safety. It's been the best Q1 for gold since 1986. Again, we already went over this. Moderna dropped 9%. Celsius, though, is up 6% after analysts upgrade on new women's energy drink strategy. And NMAX was up 722%, people. Yes, really on IPO day as well. Conservative media darling pops like a meme stock here. Now, the rest of this week, what we were looking out for tomorrow, we got a couple reports coming out. We got the JOLTS, we got ISM, we got PMI final. We got labor data and manufacturing prints, which could fuel more recession paranoia. Now, that is one thing to look out for. We will be updating all that as well. Wednesday, we got the big one. The big one. It is Liberation Day. Expect headlines to drop faster than NVDA stock has in the last month. Thursday, we have Challenger layoffs plus jobless claims. And then Friday, we have the March jobs report. The forecast here is 135K. Any miss equals DEFCON 1 recession. Panic, baby. The key takeaway here, between macro landmines and options for the carnage, bulls are on borrowed time. Everyone else is sitting in puts, sipping gold. If March was a warm-up, April might be a full-blown margin call. With Trump dropping tariff bombs, dark pool whales going ghost, and the options market waving red flags or white flags for a surrender in this case, this isn't a dip, it's a warning before another big move down. Smash that like if you're emotionally numb. Subscribe if you live off caffeine and puts. And drop a comment below if you're riding the NMAX rocket or buying Celsius with your stimulus check. Stay cynical, stay hedged, and remember, hope isn't a strategy. I will see you dirtbags and degenerates tomorrow. And stay fucking dirty, boys.